money for Affluent Private Client Group, and he's an expert in technical analysis. Now he's become an accomplished technician in the studies of Elliott wave, Gann Dow theory, cycle theory, and in 2007 he started in the money stocks. So, Nick, thanks for joining us today. Okay. Well, when they bring Nick on, let me stop for a minute, and I'll just tell you the goal of Yorba Radio is to provide you the best people that we can find with the most accurate information that we can find so that you can use this information to trade better and not to get yourself into the trouble that the markets can push you into if you don't have good advice. So, Nick, thanks for joining us on the show.
Again, Michael, for having me.
Oh, my pleasure. Let's start off, Nick, with your thoughts on the market currently and the yearly outlook. Give me an in-depth look at that.
Well, we'll start right now with the market. We went yesterday and tested 0.75 retrace level from the July 2010 lows. We still haven't breached that level yet. That's right around the 1100 mark on the S&P 500. Now, we did breach it briefly in overnight trading on the ES futures, but the S&P 500 cash did hold that level. So there's always a chance, and I'm going to say right now, it's probably a little bit of a long shot. These markets may sell off a little bit more as we have the weekend approaching, so I wouldn't rule out. But I think by August 15th, we're probably going to have a tradable bottom in place. If this level breaks here, I'd have to just go and look at the July lows of last year as being the next important support area. And
well, let's give everybody a number on that. You're talking the July lows. You mean the 1,000 on the S&P? 1,002?
That'd be around 1,010, 1,011. That would be the July lows of 2010. So if we don't hold this 7.5 retrace where we are currently, which is around 1,100,
right,
we got another 90 points to go to the downside.
Yeah, the thing I was noticing about the market today is this, yes, we had a real strong downdraft and a 400-point rally, but even though the market pulled back today, it didn't break any of the lows.
No, it didn't, and that's why I think that, come by Monday, if we don't take out that low of yesterday, because yesterday was the biggest trading volume of the week, and it was a real pretty significant bottoming tail from an oversold condition. Normally we'll see in these kind of environments, at least in 2008, and if you go back to 98 or even 1987, the market will make a snapback rally the last 2 or 3 weeks sometimes. So we got to be prepared for that. If that does happen, there's fast money to be made at that point.
Well, it looks like that's the point right there, fast money, because this thing is moving so hard down and up and then back down that at this point, what's your thoughts? Do you think we're going to bounce higher tomorrow, or you going to wait till?
Well, I'm a little uncertain, but I think by the 15th of August, which is Monday, also brings us into an options expiration week. I think we'll have a tradable low in place, if not before that date, but on that date.
Okay. All right. Well, there's a question in the shout box. Maybe you can answer this. Our previous guest, we didn't have enough time to get to it, and I thought that you have a good answer for this. I've got thoughts on silver. What are your thoughts on that?
Well, I like silver for the long term, but I've told my subscribers that I don't like silver right now for the remainder of 2011. I think we're going to get a great buying opportunity along with gold again in 2012. However, if you look at silver, we are still sharply below the late April top, and even if you look at it 4 days ago on August 4th, we really had a big sell-off there. And silver, even though it rallied up today, it still didn't rally on significant volume. It's still not looking like the commodity or the precious metal of choice right now. Gold is still the favorite, obviously, and even the action in gold is just so extended here that any kind of market bounce, we're going to get real big pullbacks in both silver and gold. And silver being weaker than gold should go down quicker. Okay,
now I'm looking at some kind of a basing here over the last couple of months at $35 on the silver. Do you think that we could break that level?
That's going to be the big test. But ultimately, I think we probably could break that level should the dollar firm up. And I do think the dollar is going to firm up during the second half of 2011. So, yeah, I do think that's possible to break through there.
Okay, so you're just a little skittish of adding new positions to the long side on the metals.
Yeah, I mean, I'm a person. I own CEF, the Central Fund, and I also own bullion, gold, and silver. But I've been a long time holder. I wouldn't sell any of my bullion, but I'm not adding anything here.
Right. So no long futures positions at $1,800 an ounce.
No.
Okay. All right. So now the Dow Jones Transport Index. Thoughts of importance, performance, usage, and trading. Talk to us about that.
Well, the first thing about the transports is a lot of investors, and I do mean sophisticated investors, will look at the transports very closely because they're a sign of economic growth. If the transports are breaking out, making new highs, it's a sign of expansion, global expansion. Everything needs to be transported, and the transports are a good sign of economic growth. They have broken down significantly now, and rather sharply after making new highs earlier in July. A lot of traders will also follow Dow theory. When the transports and the Dow Jones break down, that'll create a new sell signal. So you have to watch the transports because it really is industry in essence. It really is telling us what's being bought, who's sending, who's shipping, and things of that nature. So it really is a good barometer. Right now, the transports are holding the 4,300 level. I think that's a big level, a big test. If we break through there, yeah, you probably got a little bit more selling, and we possibly could go down and test that July 2010 low on the S&P 500.
Okay, well, some of the other people that have been on the show are calling for a rally this week, and then a continuation of an Elliott Wave Wave 3. So what are your parameters to say, all right, it's a good base, or this thing could break again? Well,
like I said, I use a lot of cycle theory. I can understand the wave theory, but we may be in a wave 3 right now. This may be a wave 3 down, a wave 3 of 1 down at the moment. May top being 1 into the June 23rd low, and we rallied up into the July 7th top, and this is all wave 3 now. So I think that if they're going to use Elliott Wave, and I'm not really I don't really use Elliott Wave that much these days, but I think we're probably in a 3 now, and we're due for a 4 bounce, and then we'll get a 5th wave down if that's the case. But that should give us a tradable rally probably into sometime in September, and then we'll see more downside.
Okay, now you guys nailed the low yesterday in your chat room, right?
Yeah, we did. We picked that off pretty much to the penny almost.
Okay, so what alerted you to this call?
Well, the market was making a little bit of a pretty good sell-off after the Fed announcement. A lot of times what happens, especially when we day trade and around a big announcement or a big rate decision or anything that goes on, we'll take out the lows pretty significantly. But a lot of times we were coming up into that 110 level on the spiders, and that matched up picture perfect with the 7.5 retrace. If you look at a daily chart of the spiders or the S&P 500, you'll see that we pretty much tagged the 7.5 retrace from the July 2010 lows to the penny yesterday, and that was really picking off the bottom.
All right. How does somebody get into the trading room so that they can see you do this and actually trade over your shoulder?
Yeah, sure. They could just come to inthemoneystocks.com and join our intraday stock chat. And we go live on the mic right a little bit past 9 o'clock, right up until the close of the day. And you'll get all of our intraday trading calls all day live as we do them.
Okay, we got a couple of minutes left. I just wanted to know, what kind of markets are you trading? Is it just the S&Ps, or you trade multiple markets?
No, we'll trade S&Ps, we'll trade stocks. Some people will trade oil futures, ES futures. So, we're going to scan the markets all day, looking at market leaders. We'll also, when the small caps are running, and they're not running now, but we'll trade the small caps as well. We've had tremendous gains there. But we try to trade in anything that's active. As long as we have some volume, some volatility, we could find the major support levels, we'll buy them. Major resistance levels, we'll short them. And hopefully we're going to get, pretty decent action throughout the day.
Okay, I want to talk to you some more on the other side of this break in the next segment. I want to talk about the European crisis, the Asian action, and some of these stocks that you do trade, the popular ones. Can you sit with us for another segment?
Sure, Michael. Sure, love to.
All right, that sounds good. But before we take off, these trades, how do you see, the night ending? We got about 30 seconds, so just tell me how you see the night ending for the S&Ps.
Well, we have the Asian markets are going to open up tonight. They're probably going to be down pretty sharply, but I'm not going to be so bearish at the moment, really, until we take out this 1100 level on the S&P 500. A lot of times we see this big rally day, a sell-off, and a lot of times it can be a fake-out.
Okay. Well, let's pick that up on the other side of the break. All right.
Sure.
All right, ladies and gentlemen, you're listening to Nick Santiago, President and CEO of In the Money Stocks. We'll be right back with them on the other side of this break. Okay, welcome back to Yorba Radio. I'm Michael Yorba, your host, also streaming live on yorbamedia.com. And I failed to mention that thank you for viewing or listening with us in the 49 countries we're broadcasting to, as well as the Dallas metro area. Now, my guest who stayed over the segment is Nick Santiago, President and CEO of In the Money Stocks. Nick, I've got a couple of questions for you. I wanted to see if you can help me answer them. All right?
Sure.
All right. You also trade popular stocks that you were talking about.
Yes.
You trade those live so people can look over your shoulder and get a better trade off. Tell me, what are the stocks that you're looking at to trade, or you feel that are good enough to trade?
Well, we trade Apple, Google, RIM, Amazon, ExxonMobil, ConocoPhillips, Chesapeake Energy, Halliburton. We'll trade the ETFs such as the OIH, the Spiders. We'll trade the FXE. We'll also trade leading NASDAQ 100 stocks such as Riverbed, Citrix, Salesforce.com, Netflix, VMware. So, we're pretty much trading anything that is very, very active. I got to say, we probably trade up to 200 stocks on a regular basis, not every day, but within that pool of 200 stocks, we'll concentrate our trades on.
Now, are your trading parameters in regards to time, are they varying, or are you scalping them, or are you doing position trades?
Well, we'll do both. Sometimes if we have a nice setup, we're going to look to swing trade it for a bigger gain, but predominantly the chat room is more geared towards scalp traders. So we're looking to take little bite-sized chunks out of the market. Then we immediately move our stop into break-even once we have a small profit, and we try to let the second half of the position run after we captured a small gain.
Are you trading one-to-one, or are you using leverage with this?
No, we're using leverage.
Okay. Do you ever mix it up and let's say that you're long and you're going to write some calls against your long position?
You can do that. I've done that a lot in the past. I have to say I'm not really a big options trader these days because the markets have been so active, and there's been really dynamic opportunities the last few years. But it's not a bad strategy to write calls or to do some option strategies as well. I'm just not really a big options trader.
Okay. All right. Some of the stocks you're trading, say today, what's your thoughts are about them?
Well, today you really didn't have to go far. We did have a few stocks that did very well. Lululemon was one that made a nice move. Also, Sina made a nice move, SINA. There were some stocks there, but today and even yesterday and the day before, believe it or not, a lot of the focus has been on the spiders and the diamonds because we're getting such dramatic moves in this market. Normally, we don't get a 2, 3, 4 point diamond or spider trade. Yesterday in the chat room, we picked off the low of the day. That was a 7-point move on the spiders. So you don't really have to go far these days and look at a lot of different things. You could really just focus on the actual indexes, as everything is moving with the indexes right now.
All right. Well, tell me, let's get into the European situation, because there's a lot of problems going on in Europe. Obviously the riots are breaking out in London, but the debt issues are spilling over, and they're causing a lot of fear to just tidal wave around the world. Give me your thoughts, sir.
Well, as I said last time I was with you, I think the European Union is doomed ultimately. I have that penciled in probably 3 years away. I think it's going to break up one country at a time. But in the meantime, what I think we need to really worry about is what hedge fund or what bank out there is about to fail, because that's really what the market's telling us. And if you go back and look at 2008, when Bear Stearns collapsed, that was one of the greatest trades I ever made. I bought the market the day Bear Stearns collapsed on a Sunday night. I bought the market Monday morning and rode that move on the S&P all the way into mid-May. So, again, once I think we see one of these banks collapse or a hedge fund collapse and the news is out, I think that we're going to get some kind of a tradable bounce. But it's going to repeat itself. There's no doubt about it in my mind that the European Union is really done ultimately.
So how long after that do you think it's going to take for these people to actually go back to their own currency and say, you know what, forget this. I can't I can't fund my country like the United States is when I'm tied into this European Union situation, because they just can't do it now.
No, you just can't. I believe it's going to happen in 2012, by the middle of 2012.
Oh, you think it'll take that long? You don't think that's going to break up this year?
Well, I think they're going to try to do what the Fed did, and they're just going to, continue to try and buy bonds. But, we know that's unsustainable. So, yeah, I think it probably could last. They're going to put Band-Aid fixes on the problem. They always do. But the central banks are coming under a lot of scrutiny now from, just people in general. So, I think the euro will probably hold until mid-2012.
Okay. And with this going on, are you thinking that you're going to take a position on the direction of the euro?
Yeah, eventually we will. I'm looking for the dollar to start probably making a bottom soon, I think sometime in September, and then I think it might be time to short the euro there. But, you want to see the pattern form on the charts first before we really jump in on that kind of a position.
Well, all right, so if it does fall off here, I'm looking on a longer-term basis here, say June 2010. It's a 122 level. Do you think we'll start breaking new lows on that when it starts breaking up, or it's going to continue to just hit a wide range?
Well, right now we're in the range. So, but if you look at the euro put a top in May, right around May 4th, and we've really been in a range ever since. The longer this consolidates like this, the more compression it's having for a big drop. And that's something we're going to have to watch out come middle of September.
Okay. All right. So you're thinking sometime middle of September that you might really start getting some real strong long positions on the dollar then? Yeah,
I am. I think that's going to be about the right time. Right now, you saw yesterday, once the dollar started to decline, that's when we got the big rally. So today the dollar was very strong. In fact, if you look at a U.S. dollar index, and that's one of the big barometers that I use to day trade, and I don't even really trade the dollar, but it was up 19 cents and dramatically off the morning lows. 6 o'clock this morning, U.S. dollar index was trading at 73.90. It closed this afternoon at 74.90. I know it doesn't sound like a lot, but a whole point in the U.S. dollar index is a lot of meat and potatoes, and it will cause the markets to deflate, including commodities and everything else.
So then you're looking at these on a longer-term basis, say back in the April lows, and then you had another low in October, as I should say April 08, the lows in November 09, and then May 11, right?
Yeah,
You've got three big lows in there. You're looking at that as a basing for some kind of a strong rally. Do you think it might get to these highs back up at 88?
Well, I think that right now, if you just look at a U.S. dollar index chart, we put a pretty decent low in on May, in early May. And
yeah.
Now we're chopping around. We haven't gone down. If this thing bases a little bit longer, yeah, I don't see why we can't move back up to maybe 80, 81. And possibly higher.
Okay.
It's very, very likely. I think that the dollar, and that's when we're going to see, all these commodities come down. I'm very bearish on all commodities for the second half of the year, including copper, iron ore, steel, anything industrial.
Okay. All right. Let's move on. We got a few more minutes left. Let's move on to the Asian crisis. So 3 minutes left.
Okay. Well, right now you're seeing. Asia really is fighting inflation, okay? You see, India has raised rates. China, doesn't really want to raise rates, but they have no choice. And we're just seeing so much inflation, and that was really a cause of QE2. So when all these nations are fighting with inflation and these stock markets are coming under, it's really just a global headwind. Even though economically China is doing well, that could change very, very quick. And I think traders should really follow the Shanghai Index, because that index has really led our markets for the last 5 or 6 years pretty accurately. So, and if you see Shanghai, I should say, the Shanghai Index has really underperformed over the last several months.
All right, so you're getting bullish on this thing.
Well, I'm not at all bullish on Asia whatsoever. I think that this is going to be a global crisis right now. I think everything will go down, but I'm not at all bullish on Asia whatsoever right now.
Well, it's underperformed, so I took that to mean that you're thinking about trying to find a place to buy it, but you're just saying no, it's weak, it could get weaker.
Right. When China underperforms, when the Shanghai Index underperforms, it's a warning sign for us that our markets are vulnerable, and hence, second half of this year should be pretty bearish.
Okay. So now let me get on the right side of the trade with you. You're looking for a place to short it.
Well, yeah, but it's down so much right now. It's a tough short. But yeah, after we get this bounce, I think all these markets are going to start trading together, and ultimately they'll probably go lower. But we should get some kind of a tradable bounce within the next few days.
Okay. All right. I'll take that from you. All right. Last thing before we go, give us what you're looking for tomorrow, so that people can tune in come in and find you and watch you trade that.
Okay. Unfortunately for tomorrow, we're probably going to be in another volatile environment. We did get some Cisco earnings after the bell, so that may give the market just a menial little bit of a lift, especially in technology. So what I would watch for tomorrow would be the networking stocks. They may show a little bit of strength. You got stocks out there like Juniper that have been absolutely annihilated, and that could be a little bit of a day trading opportunity tomorrow. Also watch Riverbed. This is another networker that is in the cloud space, and that one could be in play tomorrow as well. So I'll have my eyes on the networking stocks, not particularly Cisco, but I will be looking at the sympathy plays in the networking space.
All right. Very good. Thanks so much for being on the show, Nick, and we'll bring you back next week.
Thanks again, Michael. Thanks for having me. Have a great day.
You too. Nick Santiago, President and CEO of InTheMoneyStocks.com. Go to his website, watch him trade.